You are trading liquidity wrong. In this video, I want to go over what liquidity is because I see most of you guys still don't fully understand, the term liquidity. It's kind of like a buzzword going around right now, in the trading space. Oh, trade liquidity. But what does it actually mean? So liquidity equals open orders. That's all it is. It's just money in the markets. Okay, so open positions, that's what liquidity is. Liquidity is actually what moves price. Okay, so if I pull up Bitcoin here on the 30-minute time frame, you'll notice that we have these highs and these lows. Actually, I'm going to edit this. I don't like the arrow at the end here. Normal. Okay. So we have these swing points, right? Swing highs and lows here. A swing point here, and lows here. Okay. Liquidity lies above and below these lows. So let's say I have a high here, right? And I have a low here. Liquidity is going to be above and below these swing points. And the reason being, why we have open orders here is, for one, people that entered a short position are going to what? Put their stop losses right above that high. Okay, same thing down here. People that open a long position, they're going to put their stop losses below the low. That's how most retail traders are taught how to trade, right? Stop loss is going to go below the most recent low, or if you're taking a short, it's going to go above the most recent high. So this always, there's liquidity above these highs and lows. Okay, we also have liquidity in the form of fair value gaps, but you need level 2 data to actually figure out, which fair value gap is legit. That's a whole nother story, but we're not going to talk about fair value gaps. We're just going to talk about these swing points because this is the type of liquidity that I use. Okay. Another reason we have liquidity here is because when people see that we have broken this structure, okay, they're going to break out long. Okay. They're going to enter longs, saying that this is a breakout of this previous high. And what the market will tend to do is reverse. Okay, this is what I call a swing failure pattern. Okay, ICT will call this turtle soup, but that's not the term for it. Okay, it's called a swing failure pattern. You can call it whatever name you want, but in classical charting, this is called a swing failure pattern. So when we take out a previous high, we grab this liquidity, right? We take out those open orders, and then we continue pushing in the opposite direction. So we fake out the breakout traders. Okay, we fake out, retail. People are going to say, oh, it's a higher high. It's not a higher high. This is called a sweep of liquidity or a swing failure pattern. Okay, so when you're breaking a high, there's two things that can happen. Okay, you can sweep the previous high, which is taking out this liquidity, okay, into a swing failure pattern into the opposite direction, or you can run that high. When you run a high, it's a confirmed breakout, meaning multiple candles closed above that high with displacement, right, leaving behind bullish fair value gaps, a strong move up, making a higher high. Okay, that is a breakout. Okay, but we're not talking about breakouts. We're talking about liquidity sweeps in this case. So again, that's just an example of what liquidity is. So I can see here on the chart, I have liquidity here and I have liquidity here. Okay, pretty simple to identify. We also have an equal high here. I guess we actually took that out. But sometimes we'll get an equal high or an equal low. This is like confirmed. There are a ton of open orders. So I'll jump into that as well. Let me remove all these drawings. So anytime you see a formation like this, where you have one high and then you have another high, but it doesn't sweep this high, you can expect at some point price will come back up to take out this equal high. Meaning look for long positions down here to take out that equal high. Okay, same thing for an equal low. Okay, if I have this W formation, but this low has not been taken out, we are building liquidity here. There are open orders here that need to be taken out most of the time. So in this case, you can look for shorts. If your bias is in a downtrend, you see this equal low, then you can look for shorts to take out this liquidity. Okay, grab these orders that haven't been filled yet. Okay, take out retail stop loss. That's going to be right here. So let me show you another example here as well. So let's say I have a chart that looks like this. Okay, making higher highs and higher lows, something like this. Okay, this is actually a chart if we're at a key level on a higher time frame, a key horizontal level, golden pocket fib, whatever, that I'd be looking to short because we are building liquidity at these lows and they haven't been taken out. Meaning I want to look for shorts to take out some of these lows, to grab all of this liquidity. Compared to a move like this, where we're seeing higher highs and higher lows and these lows are being taken out, right? Something like this, where these lows are actually being taken out. This is less likely for price to retrace all the way down here after it's already taken the low out. Once it takes the low out, it's telling you that bears tried to reverse the price below this low and they couldn't do it, right? Bulls stepped in, we reclaimed. This is an example of a swing failure pattern, okay, to the upside. This is when I'd be looking for a long position. Okay, so that is the basics of liquidity in terms of swing points. Okay, so we're going to go slightly higher time frame. I'm going to mark out these levels of liquidity here. Okay, and 99% of the time when I'm taking a trade, I will use a liquidity confluence. Okay, so these are the main levels of liquidity. Okay, the reason I'm not drawing this level is because we had already taken out this high. Okay, we'd already taken the liquidity there. So that's not a super high probability trade in my opinion. Something like this would be a high probability trade, right? We have an equal low. We can see price did not sweep this low yet. So there is still liquidity here, okay, at 94, right? A little sub 94, which we could take out. But again, bias is still bullish. Does that mean I just want to short from here to this low? No, it means if we come down to this level, okay, let's draw our fib tool out. If we come down to this level, right, I will be looking for price to sweep, maybe tag into this golden pocket one more time, reclaim, and that's going to be my long trigger, okay? After we have taken out these lows. On the reclaim, then I'll set my stop loss below that swing low, and I'll target the highs up here, okay, to take out these highs. This is just trading structure to structure. It's very basic stuff. People overcomplicate this. It's really not that difficult. I mean, you're literally just looking for swing highs and lows, okay? That's it, that haven't been taken out yet. You know, it's not rocket science. I mean, again, you can even see here, you know, right here, we're creating kind of like an equal high here. So again, you're in bullish market structure. What are you going to do? You're going to draw your fib. In this case, it didn't come down to the golden pocket. We'll use this swing point right here, right? Most recent swing low. All right, it's in our key fib zone. We have horizontal confluence here. Okay, resistance, resistance, flip to support. We're testing this level as support again. Again, what do I always teach, guys? Bullish divergences down to a lower time frame. Right? Creating a 3 drive, you're longing, okay? Because you understand the bias is bullish and we're most likely going to go up to take these highs because that's where the liquidity lies, right? Up here, above this high, above these highs. So we can be fairly certain that if we're in a bullish market structure, we're at a key level, it follows our confluences, that we can take a long here to take out these highs because that is where the open orders are. We need to take out these equal highs, okay? So again, that's just another live example. I'll show you guys some more. We'll pull up ETH USD. So I'm going to show you guys why I believe ETH is going to be trading above 4,100 and well above 4,100 in my opinion, fairly soon. Okay, so we have this high here. We did not come up to take out this high. It would have been different, okay, if ETH had swept this high and displaced down, breaking structure, but we didn't do that. All we did was create an equal high here below 4,100, and we'd actually swept this low here. Another example of a swing failure pattern here, right? Taking liquidity. This is also a setup that I posted in the Pro Discord too. Okay, we're at our optimal fib entry. Okay, we have our golden pocket fib. We have our previous structure highs here. Okay, resistance, resistance, flip to support, support. We're testing this level again. Okay, and we take this liquidity. Okay, entering somewhere around here on a lower time frame. Okay, that was a beautiful trade after sweeping these lows. Okay, because again, remember, since we'd already taken these lows here, we're probably not going to go and take these lows again because we'd already swept the high time frame liquidity here. So now we can expect after we sweep, maybe one more retest, but we're going up. We're making a higher low here. Now, again, I'm going to be looking for longs until this high here. Okay, I'll take another example of an ETH long that I took. I recently got stopped out of break even. Oh well, I drew this fib here, bullish market structure. Okay, right into that fib. Retesting this previous high. This is where I called the long inside the Discord. Obviously got stopped at break even, you know, weekend price action is kind of shit. But the reason I took this long, again, is because I'm targeting this equal high. I understand that there is a ton of liquidity here at 4,100, right? Above this high here that needs to get taken out. We've created that equal high. So eventually price is going to go up to grab this high. It's not a matter of if, it's just a matter of when. You know, so any retrace I get into a major golden pocket, for example, this level here, 3,700, if we get, I'm going to be looking to long, you know, entering on a lower time frame to target this high, to take out the liquidity that's up there. We'll look at one more example. Let's go to like Sol. Sol's been really weird to trade, has not been easy. But again, this was a 3 drive idea I had. Again, we're taking out liquidity, right? We have these lows here, right? We have one low right here. Okay, boom. We have another low right here that didn't get taken out. So we've created this equal low. So I was waiting for price to sweep these lows, take out this liquidity, and go up. Okay, and that's exactly what happened. I actually got stopped break. No, I'm still long on Sol. So I'm still long from around here. Looks like I might get stopped break even. But again, at this point, even here, we can see, took out these lows as well. Took out these lows, and we swept these lows, right? See how many lows we're sweeping, guys, as we come into this level? And we swept these lows right here, creating a bullish divergence. So, in my opinion, we're probably most likely going to go up from here. I don't think Sol will go lower than these lows because we'd already taken out all the major liquidity here. Also tapped into a higher time frame order block. This is where you can stack confluences, right? So, in my opinion, you could look for a long here on Solana, right? The local GP, somewhere around here, 215. Now, this is valid because we'd taken that liquidity, right? When you trade liquidity or swing failure patterns, the great thing is you're only entering after retail gets stopped out. That's how it works, right? You're entering after retail traders have gotten stopped out. And again, I think Solana will come up at least to these highs, okay? And probably these highs as well. Okay, we're making equal highs here. Okay, we didn't sweep this high. We created an equal high. So, I'm expecting this target to get hit eventually, right? So when people say, oh, target the next, recent high, this is what they're talking about. Okay, because it's not like price swept this high and displaced down. No, we made an equal high here, okay? And we actually swept these lows. So now we can look for longs targeting, the $250 level, which I think we will get in the next 30 to 60 days. Okay, could be wrong. But that's just what I think for Solana, okay, just based on liquidity alone. And in this video, I'm not really jumping into any other confluences, right? I'm strictly using those highs and lows on the chart, and I'm using the golden pocket fib, okay? I'm using my custom oscillator. So I haven't even integrated any of the confluences yet. I'm just looking at structure, at market structure, and telling you guys what I'm seeing. So, okay, so to conclude, okay, liquidity, all it is open orders, okay? It's open orders in the market. So when people have limit orders, when people have market orders, that's liquidity, okay? It's just money in the markets. And most of the time, this liquidity lies above these highs and lows, okay? So you want to look for confluences at these levels, right? Let's say you have a golden pocket fib. Let's say you have a key horizontal level. You have a point of control. You have bullish and bearish divs. You got your daily bias in mind. If you have all of that into consideration, you can look to take longs, okay? Another way I like to trade these liquidity levels real quick before I end the video is if I have a daily bias that's long, let's say I'm in an uptrend, something like this, right? And I see we have these lows here, okay? And I see that we have the golden pocket fib overlapping this low. I'll look for longs taking out this low at the golden pocket, because this is just an enormous amount of confidence, right? We have a swing low that needs to get taken out. Okay, we take out this low, tap into our golden pocket, right? Maybe retesting some previous highs here, key level, whatever. Wait for a reclaim, and that is, a 10 out of 10 long idea, something like that. Okay, because, you're breaking down, retail gets scared, they sell right into your buy orders, right? Price flips, reclaims, and then you go long. Okay, so look for overlap with, key lows at key levels, golden pocket fib, that sort of thing. Hope you guys enjoyed and found value in this video. Make sure to leave a like. Subscribe to my channel too, because I'm super underrated compared to all these guys out here babbling, not really knowing what they're talking about, making up all these different terms, trying to overcomplicate trading. Okay, it's not that difficult. It's difficult in practice, but in theory, I think it's pretty simple. This is liquidity for beginners. So I'll see you guys next video.